Assalamualaikum warahmatullahi wabarakatuh. I'm Irma Salmi Yati, Syariah Banking International Class 2018, a student in Raden Fatah Palembang, Islamic State University. Okay, I will discuss a little material about banking management. An overview of banking management. Banks is financial institution whose main function provide intermediary and other financial services to companies and households, with the aim of maximizing the owner's wealth. From definition, covered bank and purpose function. General bank management, the purpose of saving financial decision for banks is to achieve fixed goals. Significance of general bank management. First, competition is increasingly between banking and banking businesses. Second, the majority of bank assets are financial assets, so it is easier to misuse. Third, is preoccupation with secrecy and trust required that bank apply principle of caution. Fourth, very strict clause against banking require bank to be creative and innovative. Based on its function, banks are classification into general bank and BPR. General bank is a bank that performs business activities sectional and or by the deep principle of Sharia hub services in the traffic payment. And BPR is bank that carry out businesses in a conventional way or have based in Sharia principle which in their activities do not provide financing. Based on his ownership, banks are classified as first, government banks is most of the capital banks are in the hands of government, both central and local. Second, national private banks is large bank of investment in the private parts of Indonesia. Third, cooperative banks is the larger of all of its capital banks are owned by the cooperative corporation. Fourth, foreign banks is the large of most of the capital banks are owned by foreign, both private and foreign governments. Fifth, mixed banks is banks whose capital is owned by Indonesian nation and foreign private companies, and in general most of the share are owned by Indonesian private companies. Based on their status, banks are classified as foreign exchange banks and non-revisit banks. Foreign exchange banks is a banks that carry out foreign transaction or transaction related to foreign exchange, and non-revisit bank is banks that are not allowed to conduct transaction with foreign parties or related to foreign exchange. And the last, based on the term of how to determine price, banks are classified into conventional banks and Islamic banks. Conventional banks is banks that the determining price determine a certain interest rate, both for funds collected and sent. And Islamic banks is banks whose pricing does not a certain interest rate but are based on Sharia principle. This classification of banks cannot be directly applied of this time, given the phenomena of banks ownership in Indonesia after the 1998 economic crisis is very complicated. There are three. The first, commercial banks management objective is maximizing shareholder wealth. Shareholder wealth is measured by the market value of the share and amount of cash dividend paid. The market value of bank share depends on three factors. 1. The amount of cash flow paid to the bank's shareholder. 2. Determining the timing of cash flow. And 3. The risk involved in cash flow. In achieving its objective, banks face a number of risks, so they need to manage them well. These risks are credit risk, interest rate risk, operational rate risk, liquidity risk, price risk, compliance rate risk, foreign exchange risk, strategic risk, and reputation risk. Functions carried out by commercial banks are grouped into three types. 1. Payment, 2. Financial intermediation, and 3. Other financial services. OBS activities is activities undertaken by banks that are not recorded on the balance sheet, but these activities affect profit or loss, such as allocation of funds, Source of fund of commercial banks can be divided into three: 1. Deposit, 2. Non-deposit loan, and 3. Common share and related earning. In full, the liabilities and equity of commercial banks include current account, other immediate liability, savings, time deposit, certificate of deposit, securities issue, loan received, subordinate loan, and equity. And last, source of income and expenditure. Bank income comes from the sale of services, which are classified as service: 1. Individual banking, 2. Institutional banking, 3. Global banking. Source of bank income generally come from interest spread, fees derived from payment through intermediary, rental, and guarantee services. Income from its function as a broker and dealer of the capital market and foreign exchange market. Fees for product development by banks to manage risks, derivative costs expended by commercial banks each period include labor costs, cost of fund collection, depreciation costs of soft and hard equipment, tax costs, and other operational costs. Guys, thank you for watching. Don't forget to like, comment, share, and subscribe. Thank you.